Wall Street entering the day on a high note after stocks surged to some new record highs yesterday. The Dow soaring more than 500 points. The S&P and NASDAQ hitting their best level since January of 2022 after the Federal Reserve held that key interest rate steady for the third straight time. And they also signaled cuts will be coming in the new year. NBC's senior business correspondent Christine Romans joins us. You called it this time roughly yesterday. You sat there. You predicted that the Federal Reserve would keep the interest rates where they were, which they did. The markets responded positively. Futures are up this morning. What do you make of what we saw yesterday, the gains and more?
Well, look, you can look at your 401k today. You know, a lot of us have been looking through, our hands the last couple of years. Last year was a terrible year in the stock market. This year is pretty good. And I think the Fed did exactly as we expected. So why would that be good news? Because the Fed indicating that there will be cuts coming, that they are done with this rate hiking cycle. And the Fed chief, while he didn't declare victory over inflation, he said it's too early to say they've fixed the inflation problem. But he really laid out a lot of progress on inflation and on the economy overall. He talked about the economy is still very strong, but moderating. That's what you want to see. The job market, low unemployment still. So all those interest rate hikes have not hurt the job market overall. So he really laid out an optimistic Goldilocks picture. Not too hot, not too cold, just right in the economy.
But even hinting that there could be rate cuts is sort of, let me tell you, I think inflation is fixed without telling you that I think inflation is fixed.
Exactly. I mean, he wasn't wearing a bomber jacket on the, on Mission Accomplished. He wasn't, because he's got to tell America, look, if this rears its ugly head again, we can manage it. We can manage inflation. But they are definitely looking toward rate cuts this year. And when you look at their forecast, 3 rate cuts this year. So what does that mean for all of us? Well, for Wall Street and for Main Street, it means borrowing costs will start to decline next year. And that is certainly good news if you're trying to buy a house, if you're trying, credit card interest rates are record highs. You've heard me. I'm so concerned about that. Credit card debt is very expensive to finance. All kinds of financing of debt hopefully will get a little bit cheaper next year.
You seem to be very good at predicting things. So why don't you predict what's going to happen in the new year? How do you see things shaking out?
We will all be 1 year older a year from today.
There you go.
With great confidence, I can tell you that. Look, if I could predict what's going to happen, I would have an island in the Caribbean. So I won't. But I think that they've weathered this storm better than anybody expected. And remember, at the beginning of last year, it was, will there be a recession? When will there be a recession? That was completely off, right? So this economy is still very unusual coming out of the years post-COVID. So I think it'll be exciting.
Okay.
It's going to be exciting in 2024.
You're going to be right on that, for sure.
Thank you, Christine.
You're welcome.
Meanwhile, Al is watching a storm. It could impact the weekend, some travel. What's going on?
I think I could use some help from Christine. She's so good at forecasting. Come on over here. Help us out on the big board. Hey, thanks for watching. Don't miss the Today Show every weekday at 11 a.m. Eastern, 8 Pacific on our streaming channel, Today All Day. To watch, head to today.com/allday or click the link right here.